Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to CUNY Good Evening. Today is Wednesday, September 17th. I'm analyst John Gita. Before we get started, please remember to like, subscribe, and share. If you have any investment questions, feel free to leave a comment for us. Any questions I don't answer today, I'll address in tomorrow's class. Aside from tonight's important economic data on real estate, the entire market's focus is on one thing. Everyone is watching the Fed's interest rate decision coming up early tomorrow morning. Today's investment focus will start with a discussion about the Fed's decision. There are 5 major points to pay attention to. This time, it could potentially mark the restart of the entire rate-cutting cycle. It could be the beginning of another wave, especially since, within this Federal Reserve Monetary Policy Committee, the voting members seem to be stirring things up. And of course, with the addition of the new governor, Milan. In addition, there may be some litigation cases, and Governor Cook might also continue to participate in this policy decision meeting. That name might still remain on the list. So, in a bit, we'll talk more about the details of his monetary policy. There are 5 key points in this policy decision that you need to pay attention to. As long as you keep these 5 main points in mind and understand what they are, you'll have a much clearer direction for judging the market when the announcement comes out at 2 a.m. tomorrow. Next, on the industry side, we'll discuss how American companies help Trump save face. As we know, Trump has been visiting the UK days, and he's rolled out big investment and cooperation packages. Naturally, many American companies responded enthusiastically, helping Trump save face. Which companies and businesses benefit from these US-UK talks? Today, I'll break it down. Also, have you used Google lately? Google is pretty interesting. As we know, among the world's most important AI platforms and software, you have things like OpenAI's ChatGPT, Google's Gemini, and Encyclopedia Cloud for major AI software platforms. Now, within Google, this time, they have a software under their umbrella called Gemini. I actually found this on Apple's app last week. It actually took first place in the store, dethroning OpenAI's ChatGPT. What new features does Gemini offer? Can it truly impact Google's future revenue and profitability in terms of AI capabilities? I'll comment on each of these in the Group Play show today. Of course, the market's focus is still on the Fed's interest rate decisions, especially this time around 3692. We've heard that the Fed holds approximately 8 meetings a year, namely 1, 3, 5, 7, 9, 1 in odd-numbered months, plus June and December, for a total of 8 meetings. Quarterly meetings like 3692 are particularly important as they discuss the Fed's forecast for interest rate decisions, including the impact of unemployment, inflation, and even GDP. These meetings will be discussed in each 3692 meeting. The December Green Corner will review this, and it even includes dot plots. It's very, very important, so I'll review each one later. Good night, everyone! Good night to everyone from this gathering of people. KKO brother, good evening to Ing Ing, may die, may die. Long time no see. Also, Zai Malin and Gao Dongwan, good night to Ming Fiyu. And who else? Also, good evening to Marissa Chen, and good night to Grace Liao. Okay, let's first take a look at the economic data released around 5 o'clock this afternoon. It's the median of the Eurozone's August CPI monthly annual rate. Fortunately, the monthly annual rate is still maintaining inflation, which is relatively low for the Eurozone. For the monthly CPI, the previous value was 0.2%, but the actual figure announced was only 0.1%, which is a slight decrease compared to both the forecast and the previous value. As for the annual rate, the actual figure was 2%, which is also a convergence from the previous and expected value of 2.1%. This means that inflation across the Eurozone is still within a controllable range and continues to move toward the 2% target. In other words, with inflation continuing to cool, the European Central Bank still has the opportunity to keep moving toward rate cuts and easing policies. So that's the update on the Eurozone and some supplementary data. Of course, tonight at around 8:30, we'll also talk about the data released for new housing starts and total building permits. For new housing starts, the previous value was 1.428 million units, with expectations dropping to 1.365 million units. For total building permits, the previous value was 1.362 million units, and the expectation is 1.37 million units. These two data points are more related to construction and real estate, and can generally be viewed neutrally, since such data usually has a relatively small impact on the US stock market. So at 8:30, we'll just give everyone a quick overview, just so you're aware of what's happening in real estate. If you're in related markets, pay attention to new housing starts and total building permits data released at 8:30 tonight. Alright, Juvelin Insure, good evening. The most important thing I want to remind everyone is what's coming up soon at 2 a.m. this morning. If you can't sleep before the Federal Reserve's interest rate decision meeting, what should you prepare for? Pay attention, I'll share 5 key points. And compare them with what Powell and the other Fed officials bring up during this so-called Night of the Gods. Once you've made this comparison, you'll pretty much know what to expect for the second half of the US stock market session. It could even affect tomorrow's market trend. Maybe you'll get a sense of which direction things will go. The ups and downs or volatility in the US stock market will, of course, impact the following day, like September 18th, and also affect Asian stock markets, other European markets, and so on. There will be a lot of ripple effects. So, after you finish watching tonight's show and then check out what Powell says at 2 a.m., you'll have a pretty clear idea of the direction for Taiwan stocks tomorrow. Now, let's first take a look at the voting members. First, the U.S. Court of Appeals mentioned that the Federal Reserve has a law called the Federal Reserve Act. According to this law, it only recognizes that if these members engage in misconduct during their term, they can be dismissed, but this is limited to their time in office. Back when Trump accused Cook of some kind of mortgage fraud, this issue dragged on for quite a while, and he said that the mortgage fraud incident Trump accused Cook of actually happened before Cook took office as a board member. So, according to the Federal Reserve Act, it was not misconduct during his term. Therefore, the appeals court found dismissing board member Cook not in compliance with regulations. In other words, the appeals court held that Cook still had to participate in this interest rate decision meeting. Of course, Trump isn't letting this go either. As we said, he won't give up until he gets what he wants. So, Trump is about to appeal this decision. As for whether this appeal might be rejected or whether it will be effective, from what I can see right now, given that the meeting is already taking place on the 16th and 17th, and the interest rate decision will be announced on the 18th, it seems that Trump's appeal won't be in time to replace Cook. So, to sum up, I think that in this interest rate decision, whether it's during the meeting or in the direction of the vote, Cook should. He will still have a seat at the table and participate. So even though there are these Federal Reserve bills and appeals involving Cook, I think this issue might drag on, but for this meeting, Cook should still be able to attend. As for the other one, psychologically speaking, is Milan. Everyone should pay a bit more attention to Milan's position and why this. Of course, this brings us to the 5 key points we wanted to share with everyone. For this FOMC meeting at 2 o'clock, pay attention to these 5 things. First, if Cook really manages to attend this meeting as planned, watch closely to see whether his arguments lean more hawkish or dovish. It's possible that, originally, he intended to go along with the Fed and support a rate cut. Maybe most of the committee members want to cut rates. But people are like this. Every time Trump messes with you, every time he pokes at you, you get provoked. Maybe you end up unhappy, and if you're unhappy, you might not support Trump's push for a rate cut. So in this vote, Cook might be more determined to say, we should keep rates unchanged and continue to monitor inflation and employment data. Maybe he'll vote against a rate cut. This kind of variable could come up, so Cook's stance is something to keep an eye on during these next couple of days of meetings. Of course, the Fed will gradually announce the positions of many committee members, so pay close attention to Cook's decision in this meeting. If he makes it in time to attend, see whether his stance is more hawkish or dovish. That's something to watch for. The second key point is to look at the new board member we just mentioned, Milan. He's very important. His background, like I said, he has a PhD in economics from Harvard University. He has a very, very strong background in economics, but when it comes to monetary policy, he definitely leans more toward being accommodative and is more supportive of a weaker dollar to stimulate overall trade progress. He tends to favor this approach rather than imposing significant tariffs like other countries. So, everyone should pay attention, this time, with Milan joining the Federal Reserve Board. His term lasts until January next year. Observing his stance, it's clear he's dovish, there's no doubt. Trump put him in specifically to vote for a rate cut this September. Let's see if he follows through with Trump's intentions. I think it's almost certain he will. The only question is whether he'll mention the Fed needing to maintain independence and not be interfered with. Just keep an eye on those kinds of arguments. The third key point is even more important, aside from whether these committee members' positions have changed, or if there are any clear divisions between the doves and hawks, which everyone is watching. The focus will shift to the fourth quarter coming up. For the fourth quarter, meaning November and December, what are the actual odds of a rate cut in quarter four? In this FOMC decision, let's take a look at some of the statements to see what they say about the outlook. Is there a possibility of any monetary policy adjustments in the fourth quarter? If there really is a rate cut in September, then moving forward, in October and then December, how strong is their willingness or inclination to cut rates? Their willingness may depend on things like employment data or inflation, so we also need to keep an eye on the current situation. At this stage, these committee members are also considering how the fourth quarter, Q4, market will be affected by the ongoing trade war. What are their views on inflation and the job market? Points. If their views lean more dovish, as we've often heard, then there's a chance for 3 rate cuts in total this year, possibly in October and December. It's something we can look forward to, but of course, it still depends on what the statement says later. Overall, that's my estimate. It would be more reasonable to expect 2 rate cuts this year, maybe one in September and then another at the end of the year in December. That would make sense. After the September cut, you observe for about a month, hold off on any action at the end of October, and if you notice things aren't going in the right direction, you can make another rate cut in December and adjust accordingly. That would be a safer approach. So, let's pay attention to what this meeting says about the probability and number of rate cuts in quarter four. Another very important point is that, as we mentioned, in the Fed's quarterly meetings in March, June, September, and December, they always release an economic forecast statement, a summary of their economic outlook. This includes projections for things like gross domestic product, unemployment rate, core personal consumption expenditures, which is inflation, and the possible range for interest rates this year, next year, the year after, and even the long term. This is extremely important because it gives the market some guidance. So, let's also look at the summary of economic projections this time, as well as the so-called dot plot, which shows how each committee member views the future for this year, next year, the year after, and 4 different time frames, short, medium, and long term. We need to pay close attention to which range they expect interest rates to fall into, because this is very important. Why? Because in the previous quarterly rate decision at the end of June, the original forecast was that there would be 2 rate cuts this year, and then, in 2026, there would be 1 rate cut. So, 2 cuts this year and 1 next year. This time, whether there will be any adjustments in the dot plot or in the economic forecasts related to the rate decision is very important. For example, if you note it down, let's say in June, they said they expected 1 rate cut this year. Then, if, for example, in September, the summary chart suddenly shows that there could be 3 rate cuts this year that would be considered dovish. It would mean there's a chance for 3 rate cuts before the end of the year, possibly in September, October, and December. Okay, if they stick with 2 cuts this year, then the focus shifts to next year, 2026. Just like I mentioned earlier, in the mid-June rate decision, the original forecast was for just 1 rate cut next year. If, in the September forecast, that number increases from 1 to 2 or even 3 cuts, it means the momentum for continued rate cuts next year is still there. What does that mean? It means the U.S. stock market, the economy, corporate borrowing costs, and consumer spending are all likely to move in a more positive direction because rate cuts are generally good for businesses and the stock market. So, the difference between 2 and 1 rate cut is actually quite significant. Finally, there's a bit of a contradiction when it comes to inflation and employment. We know that, based on recent economic data, whether it's CPI, PPI, or PCE, it all seems to be hovering around 3%. It hasn't surged dramatically, nor got out of control. But after August 7th, when global reciprocal tariffs were implemented, and even before that, with steel, aluminum, and auto tariffs 25 to 50%, many countries imposed tariffs. After these tariffs were in place, by the 4th quarter, inflation could indeed. There's a chance it could start to stir and move upward. As we said before, whenever the Federal Reserve sees inflation or prices spike, as long as prices are rising, their monetary policy basically won't go in the direction of rate cuts. They won't use rate cuts as a response. To curb inflation, you must raise interest rates. But raising rates is exactly what Trump doesn't want. On the other hand, the job market, it's clear from data over the past 2 to 3 months that the job market, whether it's the latest U.S. unemployment rate or non-farm payroll numbers, has underperformed expectations. The job market is relatively weak. Logically, when the job market is weak, the Fed should cut rates to stimulate the economy, boost employment, and encourage companies to hire or lower costs. When the job market is weak, rate cuts are needed. But if inflation is pushed up by tariffs and prices are rising, it creates a contradiction. When prices surge, the Fed should raise rates, but it can't, even though the job market is clearly weak. It's weakening. They cut rates to save the economy. One hand, raise rates to curb inflation. The other, cut rates to save jobs. When these two needs contradict, everyone should pay close attention to the interest rate decision, what Fed Chair Powell will do. When he takes everyone's opinions into account, what are these committee members more concerned about? Is their main focus on the job market or on prices? At this time, the emphasis is on the fact that the current job market is very weak, extremely weak, so we will continue to implement accommodative monetary policy and keep adjusting our monetary policy. If that's the case, if he says something like this, it means there's a chance for rate cuts in September, October, and December. But if this is the Fed's statement and the focus isn't on the weakening job market, but instead on inflation that seems to be stirring a bit, then relatively speaking, the strength of monetary easing will be held back because if inflation keeps rising higher and higher, what happens to the Fed? It can't rush to cut rates. It has to keep interest rates at a certain level, not change them, in order to suppress inflation. So these two are opposite directions, so everyone needs to pay attention to Lynch and Leong-Sees. The 5 key points in this interest rate decision. I think what's more important are the last 3 points: how to estimate the number and probability of rate cuts in the 4th quarter, and how the dot plot and other indicators are actually showing things. The economic forecast, is GDP up or down? Crucially, as mentioned, rate cuts, 2 this year, 1 next. Will there be an adjustment in September? Most importantly, what about inflation and job market? Where the focus lies on outlook on 2 markets is important. Remember 5 key points. Keep 5 key points. If it moves dovish, leaning toward easing, tonight the US dollar and stock markets are likely to rise. So what about tomorrow's Taiwan stock market? There's still a chance it will go up. As we say, when the chickens and dogs rise, everyone benefits. But be careful, if easing, tonight they cut rates by a quarter point, that's already a done deal in the market. So if tonight they cut rates by a quarter point, it might be positive, but if the market surges on this news, watch out for short-term profit-taking. After all, there could be a quick influx of capital due to the short-term positive news. So if everyone rushes in and the market spikes, remember to sell some shares. Around 9:30 or 10 o'clock when the market opens, keep an eye on things, because volatility will only increase as we get closer to the 2 o'clock p.m. Fed rate announcement. Risks and volatility will definitely follow, and Powell's speech will make things extremely volatile. So, for those worried, just remember to lighten positions a bit, reduce holdings to deal with uncertainty. I think that's a safer approach. If there's good news, remember to sell into the rally. Now, if tonight at 2 o'clock a.m. they suddenly announce not a quarter point cut but a half point cut, a big cut, then that would be even more positive for the stock market, even more bullish, because it would exceed market expectations. A rate cut itself is good news for the stock market, but the degree of positivity can vary. A quarter point cut is considered reasonable and expected, since the whole world has already anticipated it. But a half point cut, which exceeds expectations, feels even better and more accommodative. So, the interpretation of this will be a bit different. Remember, if the market surges, take some profits first. If worried, reduce positions a bit before the meeting, that's enough. Good evening, Anaya. Good evening, Hiwubuji. Hello, Alice Fu, good evening. That KGOL thing a few days ago, regarding the Conservative Party assassination, I must clarify, with political stuff, we don't understand it. Wasn't someone assassinated recently? I think he was pretty young, maybe in his 30s? In the US, gun violence is more rampant, so things like this happen often. To sum up, sometimes they're two completely different fields. It's really hard for us to be especially wise about or judge these kinds of things. Anyway, there are various positions, and I don't know how to put it. Anyway, pay a little attention to the 5 key points of the interest rate decision at 2 a.m. tomorrow. It seems that the government bond yield continues to decline, approaching 4% and about to fall below 4%. The overall trend is towards a rate cut. The final interest rate is estimated to be 3.65%, and the interest rate cut index remains around 2.7 to 2.8 times. The US dollar index continues to be relatively weak. Although it rose slightly by 0.1 percentage points today, the 50-day moving average continues to weaken. We have said that as long as the green 50-day moving average cannot be broken through, it will form counterpressure. As long as the US dollar index exceeds the 50-day moving average, it will naturally form a relatively good reverse support effect. But at this stage, it seems that the Fed or Trump would prefer to continue cutting interest rates. Under this pressure, if the Fed continues to cut interest rates, and Trump's desire to do so fuels this, the US dollar will tend to be weak in the short term. This is because rate cuts themselves will actually weaken the dollar. So, the US dollar has already reached around 96.7. Let's observe today and tomorrow morning to see whether the Fed's views are more dovish or hawkish. If it is very dovish or even more accommodative, then the US dollar index will continue to weaken, and the trend will become more clear. Let's also look at the power supply risk. Trump signed something for the 4th time, support for this or that, something about Muzong. What is Muzong online? I have no idea. 31 years old, 31. Everyone is powerless to do anything about it. As for Trump, he signed the 4th extension of the TikTok ban grace period, pushing it to December 16th. We've talked about this TikTok issue before. This ban just keeps getting extended from the time, in February or March, started with talk of a TikTok ban, and going from there. February, March, April, June, August, and now, September, the 4th time, until December 16th. Will it continue? It will continue. When will it end? They definitely won't ban it. Why do we keep telling everyone we won't ban it once, twice, 3 times, 4 times? Because you're on TikTok. Young people in the US love TikTok. Actually, not just in the US, but in Taiwan, many young people love watching TikTok and TikTok. Some people post short videos that attract attention. Sometimes, this can be a factor in elections. Don't forget, next year, Trump has the so-called term elections. The House and Senate will all be re-elected. I remember 1.3 seats have to be replaced, so there are some votes to consider, and even young people will also affect the entire market. A very big force. So we have told you before about talk. Whether talk enters or not is a bargaining chip in the Sino-US trade war. This includes whether AMD chips will be subject to export controls, whether talk will be taken over by the United States, and whether the ban will be implemented. These two things are basically the side stories of the Sino-US trade war and the tools used in the bargaining war. It is not just about whether the United States should really take over TikTok. What he wants is some further cooperation between China and the United States. The steps are well coordinated. This time, the fourth extension is extended to December 16th. Now, it's interesting. If you remember clearly, the US has been talking about acquiring TikTok for a long time. But if you remember clearly, the relevant Chinese authorities, both official and private, have been constantly opposing, and delaying the process 3 times. They all said, "We can't sacrifice our businesses for a trade war. We can't accept such an unfair treaty for a trade war." They talked about it for a long time. If you remember clearly, whether TikTok should be sold to the United States or letting the United States have it, China has been firmly opposed to this. They insist on keeping TikTok under ByteDance. But have you noticed that this time, during the China-US talks in Spain, there was a different atmosphere between the two countries? China said to reach a framework agreement with the US TikTok. What does this mean? It means there must have been agreements negotiated. For example, if TikTok poses a national security risk or concerns about data leaks, the US would say, "I have to take over TikTok." China always opposed this. So why was a framework agreement reached, even a basic consensus? Trump said he'd extend the ban 3 months as a goodwill gesture, offering an olive branch. China said they'd reached a basic framework consensus, so. In addition, Trump also said that there might be an American buyer, maybe Oracle, maybe Silver Lake Ventures, to take over TikTok's US operations. And throughout this discussion, China didn't say no, nor did they object or insist. "We firmly oppose letting the US interfere with our companies." They didn't say that. So, this means that TikTok is very likely, quite likely, during this extension. There might be shares, whether a portion or all, handed over to American companies for acquisition. Maybe the US will set up a new company or holding company, which will then control TikTok. If an agreement is reached, what does that mean? It means China is using TikTok as a bargaining chip to exchange for something from the US. Only then would China say, "Okay, you can take TikTok." There must be something in return, we just don't know what that is yet. Perhaps it's permission to buy relevant AI chips from the US, GPU chips, AI-related equipment, or something like ASML and similar items. Or chips from Western Japan, or ASML. Things like EUV, the US must approve for export to China, and China uses TITO to exchange for them. In the future, this will benefit cooperation between China and the US, and things will move in a positive direction. It will get better. These tariff negotiations will improve, not worsen. Trump had a phone call with Modi and even congratulated him on his 75th birthday. Why congratulate him if they had a falling out and were supposed to be negotiating? This suggests their negotiations made progress. Plus, Modi also mentioned support for the Russia-Ukraine war or something about Russia. Some of the previously contentious trade items may have also seen some changes. So we can clearly see that at this stage, whether it's the US and other countries, especially the biggest one, China, it seems like they're each extending a bit of goodwill and olive branches to each other. This is generally positive for the global economy and stock markets. Also, India, which used to be very tough after being pressured by 50%, now seems to be having more and more phone calls and meetings with Trump. This is also moving in a positive direction. So in other words, the trade war right now are all moving toward reconciliation among countries, so this is likely to be more favorable for the economy and for businesses in the future. In other words, if tariffs are really negotiated and lowered, if tariffs do come down. What does this mean? It means that in Q4, pressure for prices to rise will be lighter because countries negotiated well. If negotiations hadn't gone well, in Q4, inflation could surge. If inflation spikes in Q4, when inflation rises, company revenues drop, costs go up, and as revenues fall, corporate profits decrease. Consumer spending goes down. According to the GDP formula, GDP declines. If inflation doesn't increase or if negotiations go well and some countries see inflation drop to very low levels, then concerns about GDP declining are lessened. In the first quarter of next year, GDP may rebound and go up again. This would be a more favorable direction for the overall stock market or even globally. So whether it's high or low, it really just depends on how the trade war develops, so you definitely need to make a note of this and pay close attention. Good night, Hong Gong Ting. Long time no see, Hong Gong Ting. Alright, if any of you missed the earlier part of the class where we talked about the 5 key points of the interest rate decision, make sure to watch the replay. Listen to it again, and you'll be able to get through tonight's 2 a.m. interest rate decision with peace of mind. As for things like the European Commission, Ursula von der Leyen, or the EU's Executive Committee imposing sanctions on Israel and so on, well, just keep watching. Whether it's new sanctions against Russia or Israel has been constantly trying to persuade Hamas and other groups to stop fighting and promote peace, whether through sanctions or persuasion. The current war situation is tense. Whether it's the Ukrainian-Russian conflict or his own, this tension hasn't had much impact on global stock markets. It hasn't had much of an impact, and there haven't been many obstacles because everyone is watching monetary policy, fiscal policy, economic data, the Federal Reserve, Trump's tariff war, and so on. Where are the geopolitical risks in each country? Where are the wars going? Currently, these wars have no significant impact on the stock market. The focus is not on that area. So although we can see that the wars are continuing and negotiations are continuing, it seems that the focus is there. However, it has no impact on the stock market. So just look at it. The New York dollar price continues to weaken. It also fell by 0.77% today. Anyway, there is no need to worry too much until the 200-day moving average is crossed. It will also be at 8:30 later. We'll show you new housing starts and the total number of permits issued. Next up is the financial report. Federal Express will likely follow up on the industry on September 19th. We've talked about how American companies have done a lot of honor for Trump. During his visit to the UK, we saw that many companies, from Microsoft to Pfizer to Lily Coco, have proposed significant investments in the UK. There are many AI developments and AI infrastructure investments involved. For example, Microsoft has announced that it will invest £22 billion in the UK between 2025 and 2028. This investment, roughly equivalent to around $30 billion, will expand AI infrastructure and collaborate with a UK company called Nscale. This company is involved in AI cloud computing and AI services. So what are they collaborating on? They're building a facility with 24,000 units of NVIDIA's GB series, such as the Grace Blackwell line. The GB series includes GB100, GB200, and the latest, the GB300 GPU series. When it comes to this GB series, I'm pretty sure they'll be using the GB300, which is the very latest. This supercomputer will be equipped with 24,000 units of the GB series GPUs, not 240, but 24,000 units of the GB series GPUs. The GB series, the Grace Blackwell series GPUs, who manufactures them? NVIDIA. So what does that mean? NVIDIA has secured another order. So this is once again beneficial for NVIDIA and the British Prime Minister. Of course, this Time Starmer is also very pleased. He said that this time, the Technological Prosperity Partnership between the US and the UK. This agreement is considered a sign of trust that benefits the UK's AI sector. Anyway, right now the UK and the US are basically best buddies, whether it's cooperation on tariffs, opening up trade, or even working closely together on technology, defense, and AI. I think Starmer and Trump will gradually develop an even closer relationship. Also, as for Nvidia, Nvidia is teaming up. Teaming up with whom? With his son. Who is his son? The CRWB, COVID. Nvidia, COVID, Microsoft, and NSK collaborating. By the end of 2026, next year, they're investing a lot. How much? £11 billion from Nvidia, $22 billion from Microsoft, and $11 billion. Why? They're all setting up in the UK, building the largest AI infrastructure. How many sites? 120,000 units of the B-series Blackwell GPUs. That's a huge number. This Blackwell series, if I recall, was called the B200 or B300. At that time, the higher-end GPUs were about $3 to $4 million each, roughly 100 million NT dollars. So one unit is 100 million NT dollars. If you want to deploy 120,000 units, that's 120,000 multiplied by 100, which is about 12 trillion NT dollars. That's the kind of investment being made in the UK. They're also collaborating with Oxford Quantum Circuits on quantum GPUs and AI supercomputing centers. This is incredible. The more we discuss it, the more products emerge, and these are things we don't fully grasp. What are quantum and supercomputing centers? What is a quantum computer? Computing is accelerating. I look forward to sharing more. This includes companies like NSK, OpenAI, and Nvidia, who will build a new tech hub in the UK. Isn't there a new tech hub? Stockgate? The new tech hub partners with Oracle, OpenAI, and Nvidia. Nvidia, OpenAI, and the UK company NSK are building a new tech hub in the UK. It's impressive. These investments amount to roughly 40 to 50 billion US dollars, all going into the UK. So, during Trump's visit to the UK this time, I think this kind of mutual exchange and investment is really great. The more investment and exchange there is, the more beneficial it is for these companies, especially American companies. Not only does it help them expand their reach and international collaborations, but of course, it also brings in a lot of orders. Now, as we've discussed over the past couple of days, there aren't really any major issues with Nvidia. It's just a matter of whether it can hold the technical support level at 500 billion, which is very important. As for Microsoft, let's talk about that. Yesterday, Microsoft still dropped by 1.23%. Looking at its current market value, it's among the top 4. The largest, as I recall, is Nvidia with a market cap of about $4.2 trillion. The second is either Apple or Microsoft, I'm not sure which, but Microsoft is around $3.5 trillion, and Apple is about $3.2 trillion. The fourth is Google, which only recently made it onto the list with a market cap in that range as well. So the top 4 are Nvidia, Microsoft, Apple, and Google. Apple and Google, along with Microsoft, of course, make up a huge portion. Now, focusing a bit on Microsoft fundamentally, there aren't really any major issues. It's performing well and is a high-quality company. With the development of AI, it also owns OpenAI, so that's fantastic. It's just that, from a technical perspective, if you look at it, recently it's been fluctuating around the 50-day and quarterly moving averages. It's not just fluctuating, but sometimes it dips below, sometimes it goes above. Honestly, its price movement hasn't been very decisive or steady. It hasn't been particularly sharp. In this kind of situation, you need to be a bit cautious. After all, the stock price is pulled back after hitting a new high. So if there's any sudden change, like, for example, if tomorrow's early morning interest rate decision turns out to be more than everyone expects, or if Powell suddenly says something the market doesn't like, something more hawkish, okay, then some stocks with higher valuations or those that have been more volatile recently might be more likely to turn downward. So, including Microsoft, you should keep an eye on whether it can continue to hold steady above the 50-day moving average, the green line, over the next couple of days. If it manages to get through this period safely, if it can weather volatility from tomorrow's pre-dawn trading, there shouldn't be major issues. Keep an eye on the 50-day moving average. If it breaks below, trim your position. For now, it's holding, sticking around that line. Regarding Microsoft, this includes UK investments and Nvidia. This information is important because UK and US cooperation is crucial. This is generally a plus for these American companies. Now, looking back at the data released at 8:30, the economic numbers for real estate just came out. The figures for new housing starts and total building permits were both below market expectations and previous values. The total number of new housing starts was 1.307 million units, which is lower than expected and lower than the previous figure. The total number of building permits was 1.312 million units, also below expectations. Although these numbers missed expectations, their impact on the US economy and the US stock market indices is honestly not that significant. If in the future the trend toward rate cuts becomes clearer, or if there's even a chance of a rate cut this year, then these real estate numbers, like new housing starts and building permits, will likely get some support. After all, the current interest rate level is just too high for real estate. Pressure on real estate is already quite high, so it's reasonable why new housing starts and building permits underperformed. It's fair to predict in the next few rounds, interest rate decisions will be coordinated. Let's watch these numbers and proceed step by step. The real estate data, to note, has little impact on tonight's US dollar and stock market. The impact is low. Now, let's look at Google. Recently, I've been checking this thing. Talking about TikTok, it's in the context of sudden tactical moves between China and the US, right? They've talked about it 4 times, but regarding the US-China trade war, it's like a bargaining chip battle. Could it be our Supreme Court ruled it unconstitutional, and China and India seem eager to sign a bilateral agreement? Who knows, it's possible. That's one possible approach. Just like you said, maybe it's because of the court's ruling. If it's found to be illegal, then at the very least you should first reach an agreement with China and India, get the agreement settled. But in a certain situation, it's like this. Actually, I think in the end, my guess is the court probably won't go so far as to rule that Trump's tariffs are completely illegal. I think more or less some parts will be opened up and some will let Trump save face so he can go ahead and implement them so he can impose tariffs. Some parts might be ruled illegal, others relaxed. Trump could use Section 301, Section 232, or other trade regulations to impose tariffs again. I think tariffs will still be imposed. Do you know why? Because if tariffs can't be imposed, you might say the court could make a ruling that's unfavorable to Trump, and that's true. In that case, China, India, or other countries would rush to the US to negotiate with him, because they're worried the ruling might not hold. But to some extent, as I've said before, over the past 4 or 5 months, countries have been constantly negotiating. If, because of a legal lawsuit, it turns out that the tariff war is actually invalid, I think it would be like a slap in the face to all the world leaders. Maybe Trump would get slapped twice, and the others like China, India, the UK, Australia, or other countries in the EU would each get slapped once. In other words, during this period, wasn't all the discussion between these countries just for nothing? It would all be pointless, right? On the other hand, if the court really rules that these tariffs are invalid, would these countries really just ignore Trump? So let's look at it another way. If Trump loses the lawsuit, would these countries really just disregard him and refuse to engage in trade cooperation or negotiations? Would all the agreements they've already reached suddenly become invalid? I don't think it would go that far because a lot of things have already been negotiated. There are already some achievements, some room for flexibility. Would everything just be dropped the moment negotiations fail? I don't think any country would dare to do that, nor would it really go that far. That we would completely refuse to give Trump any face. So I think we should wait until the legal cases and the trade war are settled and see whether these tariffs are actually legal or not, and then we can talk. But for now, my estimate, honestly, I don't think the chances of him losing completely are very high. Like I said, some things might be relaxed, some things can't be done, but there are still some things that can be worked out. For each country, if they've already reached an agreement, then they'll just keep cooperating. If they haven't, then they just haven't, and it doesn't really have any impact. Okay, let's talk about Google for a bit. Google. I'm not sure if everyone has been using their new app recently. Google has just released a new donation app this week. Thanks to Apple's App Store, it actually took the #1 spot, surpassing ChatGPT, which is pretty rare. Why? Because they launched an AI model called, well, whatever you want to call it, Nano Banana. It's basically a banana-themed photo editing app where users can take a bunch of photos and create 3D figurines. Just this new feature alone has brought Google 1,300 new customers. And this pushed Google's monthly active users up to 450 million. You might ask, is 450 million a lot for monthly users? Actually, not really. Let me give you a simple comparison with some data. OpenAI's ChatGPT is the most famous, right? GPT's weekly active users, not monthly, but weekly, are already 700 million. 700 million! But Google's is 450 million per month. So, let's do a simple calculation. ChatGPT has 700 million users per week, and if we assume there are 4 weeks in a month, that's about 2 billion monthly active users just by multiplying. Because if it's 700 million every week, and we just multiply by the number of weeks, it's nearly over 2 billion monthly active users. That's just a rough estimate using simple math. So, looking at it this way, it means that compared to Google's Gemini, a lot more people are using ChatGPT. Of course, this data, to some extent, also has a big impact on or brings a lot of help to Google's Gemini app. After all, when there's new software, we're curious and want to try it out. Also, recently, because Google was involved in an antitrust case, whether or not it would be forced to split up, like splitting off the Android system or its search engine, the verdict came out. The court ruled in Google's favor, so they don't have to break up the company. So, if we look at Google's stock price, it keeps climbing higher and higher. This gap up right here was because of the court's ruling. They don't have to split up the search engine, nor do they have to split up the Android system, so the stock price has risen from $223 all the way up to nearly $260, just talking about the stretch. Although it dipped slightly by 0.18% yesterday, if you're holding Google stock right now, the fundamentals, financial reports, and even the future development of AI all look pretty solid. There aren't any major issues, and things are still leaning positive. As long as the 20-day moving average, the red line here, doesn't get broken, there's no need to worry too much. By the way, this software is something you can try out when you have time. I think it's pretty fun. Basically, it lets you make a 3D figurine. You give it a photo, you can use a picture of your dog, your whole family, whatever, and it'll turn it into a figurine shape, even with a packaging box or something. You just give it the photo, and it'll make a 3D object for you. Why do I think people will want to play with this, The fun part is that it turns your photos into 3D models. For example, let's say you take a family photo, a group shot with everyone together. Some people even say they've switched from GDP to JF or from JF to GDP because some features on GDP require payment, but now with Wanwen, a lot of great features are free, totally free. So, for instance, if I take a family photo with 3, 4, or 5 people and you want to make a figurine out of it, it's really cute. You just give it the photo and specify the requirements. It's all very simple. You can easily find the relevant code or text instructions online. Just send it over, and in 3 to 5 minutes, it'll make the figurine for you. Once the figurine is done, you might ask, can GPT do this? Yes, GPT can. I've used photo to make a cute figurine, holding a briefcase in left hand, a dog in right, putting it inside a figurine box. Came out detailed with a subtle smile, 3-dimensional fun. GPT can make too. GMO milk can be made too. But I think the real business opportunity isn't here. Of course, everyone can download and play with it, and there are lots of free features. But do you know what I think the real business opportunity is in the end? I think the real business opportunity is in figuring out how to take these 3D images, these 3D figurine photos, and one day, if a company can actually use this 3D data, if I give them the photo and the specifications, they can turn this 3D model or figurine into a physical product. I think that would sell like crazy. I think that would be a huge hit. Because your photos are flat, but if I can now use GPT or Gemini to turn them into 3D objects, and if some manufacturer is willing to use 3D, whether it's 3D printing or something else, to make them, no matter the template, if it can be made into a figurine, I think it will be a hot seller. to turn any photo into anything. Just make it a three-dimensional figurine. Anyone can do it. Anyone can find factories to make it. So, in the future, what will truly sell well is this actually turning things into figurines. Perhaps businesses making molds and producing figurines for comics and anime might be out of business, because you just give them a photo and they can make it for you. That's the really powerful thing in the future. Just to add a bit more about Google, their Gemini app is really famous and profitable, and since now, as for 3D printing, I think the current technology or level of detail in 3D printing isn't quite there yet. Sometimes maybe some things can be made, but some might not have such vibrant colors. For some of the nicer figurines, you still need to have a specialized manufacturer custom make them, and custom orders are really expensive. A single 3D printed figurine can sometimes cost $10,000 or $20,000. So, if in the future this 3D photo can be turned into a 3D figurine, I think it would probably sell pretty well. Nano Banana is really impressive, yeah. Alright, let's just take a quick look at the Boeing news. Boeing said that the strike in the Defense Department-related functions has already lasted for 6 weeks. The union said they plan to propose new pay raise terms on September 19th, like a 20% raise, $1 more per hour, and so on, lots of things. The reason I say just take a look is because actually strikes like this do have some impact on Boeing's stock price, but right now, who is the biggest, most important backer? It's Trump. If you remember clearly, earlier this year, around May, didn't Trump lead, was it Raytheon or Boeing or a bunch of top executives to visit the Middle East? And then they signed a lot of contracts with the three treasures of the Middle East, hundreds of planes, tens of billions in orders. Among them, Boeing benefited the most, along with Raytheon. The three treasures of the Middle East. Who are they? Qatar, the UAE, and Saudi Arabia. I think it was Qatar, the UAE, and Saudi Arabia. All three countries provided a ton of orders, hundreds of billions, even trillions of dollars in deals and collaborations. So basically, as long as Trump goes to different countries to negotiate deals, orders for Boeing and Raytheon will keep coming in. That's why, even though Boeing's quality is actually not that great, planes sometimes just fall out of the sky, there are a lot of fake parts, and there are all sorts of issues that are bad for whistleblowers, just a ton of shady stuff. We always say Boeing is a disaster, like disastrous Boeing, because their planes keep having problems, which is a huge hassle. But why does such a problematic company still see its stock price go up? It's because their big backer is Trump. There's nothing you can do about it. The two biggest airline manufacturers in the US and the world are either Boeing or Airbus. So you either fly Airbus or Boeing, there's really no other choice. Boeing is also the biggest in the US. They make airplanes, they're in defense, they make fighter jets, and for those you need Boeing. So they have to keep Boeing's stock price and company revenue in good shape. That's why, even though Boeing's performance and quality, even though its performance isn't great, the stock price still goes up. In the short term, just keep an eye on this neckline. If the stock price touches this neckline again and breaks below it, at the very least, consider taking profits on your long positions. As for whether to buy Boeing stock, that's really up to each individual. It's a personal choice. Anyway, I think the strike issue will have a short-term impact. But in the long run, with Trump actively pushing for orders, Boeing's stock price won't do too badly. When flying, we don't have a choice. We either go with Boeing or short it. If you can go with Boeing, then short it, because I still think Boeing has quite a few problems that haven't been fully resolved yet. It's just that right now they really can't keep up with all the orders. They just have more orders than they can handle. Okay, moving on, let's talk about the US stock market's pre-market gains and losses. The first company whose stock saw the biggest increase was Workday, a company that makes human resources software. Our company used to work with Workday and even collaborated with them. If you need to take time off for work, you can register with the system. Workday specializes in this kind of human resources software and secretly took advantage of it. Its pre-market price rose 8% because some investments saw adjustments and increases. Companies like Kopi saw a 1.46% increase. Netflix saw a 1.29% increase. Constellation Brands saw a 0.58% increase. And McDonald's and Wells Fargo saw a 0.5% increase. All of these saw small increases except for Workday, which saw a significant increase. Other companies that saw declines included Warner Brothers and Newmont Semiconductor. Then, AMD, Palantir, and HP all fell by 1.3% to 2% before the market opened. Tesla and Micron also fell slightly by around 0.8%. There was a slight correction after the gains. Of course, the biggest shock or fluctuation will have a greater impact at 2 a.m. tomorrow. Therefore, everyone must repeatedly chew on the 5 major key points in the interest rate decision at 2 a.m. tomorrow. If you understand these 5 key points, you will basically know whether the interest rate statement is dovish or pro-gold. You will know which direction it is. A dovish one is bullish for the stock market, while a pro-gold one is tightening and hardline. This kind of personality basically puts a lot of pressure on the stock market. After all, it is constantly setting new highs, and at the same time, many people will definitely want to sell their stocks because after a long rally, everyone will worry about being the last one to fall. Therefore, after the US stock market opens, the volatility around 2 a.m. may continue to grow. Everyone should be very careful with their positions. The Dow Jones Industrial Average remains above its 26-day moving average, maintaining a very strong pattern. It dipped slightly by 0.27% yesterday. The Philadelphia Semiconductor Index also saw a slight increase of 0.32%, remaining above its moving average, which is relatively stable. Some people say that this is why Trump's fate is even more premature. There's no other way because Trump has to take care of American companies. Boeing is so big, so he has to either take care of Boeing or take care of the company. So, in this way, the Big Seven also remain very strong, with a slight increase of 0.55% yesterday. If the market continues to rise and the volatility of tonight's interest rate decision passes, and if the performance remains relatively loose, with the possibility of 2 or 3 rate cuts in September, October, and even December, I think the US stock market will have a chance to perform well in the final quarter of quarter 4. Of course, this depends on what Powell will say tonight, so we must pay special attention. Of course, if these 7 major investors perform well in the future, I think it will still be a very important indicator for building market confidence. In any case, position control also includes the relevant key points of the 5 major interest rate decisions. I hope everyone can safely get through this relatively important quarterly interest rate decision at 2 o'clock tomorrow morning. Tomorrow night on Kunin Good Night, we'll follow up what Powell and officials said, so pay special attention. That's all for Kun Wan content, bringing you latest updates before the US stock market opens. When class is over, remember to like, subscribe, and share. Smooth trading, everyone, and we'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.